Titunya. Good morning. It's almost good afternoon. Good morning. I'm down on the program as giving a lightning talk, which was not a very helpful guidance. In fact, the first guidance I got from BIHL, I should say that this slot is a BIHL slot. They're the main sponsor. They were given some time and they asked me to fill the slot for them. The first guidance I got from BIHL was, please give a lightning talk. Something that will lighten the mood of the delegates. Then it became a lightning talk. So I wasn't sure if it should be quick or mood lifting or a bit of both. So I'll try and do it anyway. It's not going to be heavy on economic facts and figures like my normal presentations are. So I thought, let me just give you a sort of personal story of my work and relationship with the BSE over the years. And of course, I'll touch on the issues of listings and capital raising. So the start of the story goes back to 1989, and 1989 was a very significant year for me and for the BSE, because that was the year I came to Botswana from the UK, and I've been here ever since. So I came to teach economics at the university. I came as a lecturer. And one of the first events that took place in the economics department, probably about a week after I arrived, a gentleman by the name of Bill Pickin, who some of you will remember, came to give a talk to economics and business students and staff and said, we've just started something called the Botswana share market. It's just been established a little bit earlier in 1989, and this is a very new thing for Botswana. This is an embryonic stock exchange. It wasn't a stock exchange because there was no legal framework, so it was the Botswana share market. And it had just been established. And at that time, there were 5 shares being traded. Barclays was one, Cephalana was another, IGI Insurance, and I can't quite remember the other 2. So there were 5 shares. There was one broker, Stockbrokers Botswana Limited, but there was no legal structure. And I was very interested in this as someone who was teaching economics and finance. And I was then invited by Stockbrokers Botswana to start producing an economic briefing for them. And I think this was probably the first independent economic commentary in Botswana, and as many of you know, that's still something that I do. But soon after I started this economic briefing, I got a bit of an ominous phone call. So the Vice-Chancellor of the university phoned me and said, I had a call from the governor of the Bank of Botswana. He wants to see you about this economic briefing. That was quite intimidating as a young lecturer being called by the governor. I thought, what have I said that's offended the bank? So I went to see Mr. Hermans, and he said, this is brilliant. I loved what you're doing. Please continue, and please feel free to say what you want. We want some critical analysis. Even if you want to be critical of BOB, no problem. Please continue with this independent review. And I've done that ever since, and I have to say that all came through the embryonic stock exchange. Then in the mid-1990s, things changed a bit. Everything was more formalized. We had the Botswana Stock Exchange Act was passed, I think, in 95. The Botswana Stock Exchange was legally established. We had more brokers, and then quite a lot more listings over the years. And I continue with my academic work on capital markets, and even published some articles in various academic journals on the Botswana Stock Exchange, some of which I'm pleased to see are still cited by researchers on African stock markets. So let's go back to the purposes of the listings. I think many of the aspects of listings have been covered by the earlier speakers. Obviously, one purpose of listing on the stock exchange is new capital raising. I think we need to be also honest that one of the main drivers of listing is so the original owners or investors can cash out. They built up a business, it's got some value, they want value for that. So most IPOs have actually been driven by the desire by the owners to realize value for at least, they don't exit, but they want to get rid of some of their shares and make make money from, which is fair enough. So I think cashing out by original investors is important. Dual listings has been a big driver. We have a lot of dual listed shares on the BSE. Some companies deliberately, specifically want a much broader shareholder base, and this has become particularly important since the pension fund sector has grown so dramatically. And then also, a point that's been made by a couple of earlier speakers, the enhanced profile that comes from a listing. In a way, it's graduation in terms of your growth as a business. You're growing from being maybe a family-owned business to a listed company is an important graduation. That also getting the seal of approval from a corporate governance perspective is important because I think the BSE does engender good corporate governance standards. There's another reason for listing, which no one's mentioned, but which I remember a conversation with the managing director of one of the listed companies on the BSE, and I won't say who it is, and you'll see why. He said, "Do you know why I've listed my company on the stock exchange? It's protection against nationalization. Because I know what's happened elsewhere in Africa. I've worked in other African countries. I know Botswana's different, but there's always a risk the government will change and will nationalize my business. I've experienced it elsewhere. If I list on the BSE and have a broad range of shareholders, it's immunization against the risk of nationalization." So that's an interesting story. But I think it's important that the raising of capital is not a primary objective amongst these original listing companies. This is earlier in the history of the BSE. It's much more about cashing out and raising the profile. Having said that, there has been a niche, what I would call a niche of investors who have used the BSE for capital raising. And this is important to bear in mind when we're looking at capital raising by SMEs. And this was a group of junior mining companies. And we've had a lot of junior mining companies, often dual listed on the BSE and either Canadian or Australian stock exchanges. And those junior mining companies have used those other exchanges and the BSE to raise risk capital for mining, exploration, and development. And those of you who know the mining industry know this is extremely risky. This is high-risk stuff. And in a way, that's what stock exchanges are for raising risk capital. You'll never get a bank loan for mining exploration. But of course, the result is that while some of these high-risk ventures have been very successful, a lot of them have collapsed. And so that's what you expect in a risky environment. Some great successes, some failures. But of course, what people remember is the failures. And whenever I talk to people about this sort of thing, they say, "No, but I invested in ABC and it collapsed. My shares were worthless." So we have to bear in mind that buying shares can be risky. And I'll come back to that in one of my concluding comments. But I think this experience of capital raising by junior mining companies, I think it was great because, as I say, some have done very well. It comes with the risks of losses as well as the upside risks of very substantial gains. So let me just go back a bit to my story. So from 1996, I left the university and I worked at Bank of Botswana through to 2005. And this was in the days before Mbafira. And the regulator of the stock exchange was the Ministry of Finance. But however, at the Bank of Botswana, we were often consulted on issues to do with the stock exchange, especially before 1999, when we still had exchange controls, because all these dual listings and inward investment or outward investment by foreign investors all required exchange control approval. So although we weren't the main regulator, we had a big input on the regulatory front from Bank of Botswana. So for that period, I wore more of a regulatory hat. Then in 2005, I left my position of Deputy Governor of Bank of Botswana and moved into the private sector. But at the same time, I was also invited to become one of the government representatives on the main BSE committee, which I did for several years. So I had inside experience of BSE development and governance and regulatory issues as a member of the committee. I also worked closely with one of the major asset managers. I was on the BIFM investment committee from 2005 to 2016. So I also saw that side of the industry. And this was, of course, quite an exciting time because there was a lot of pension reform going on in Botswana, and in particular the establishment of the BPOPF, and that led to a huge increase in demand for local equities, which I think provided a boost to the BSE and also was a driver of some of these listings. And one of the main impacts of the BSE has been on the portfolio composition of domestic institutions like pension funds and insurance companies, and provided them with, to some extent at least, an alternative to offshore investment, and which was not there prior to the establishment of the stock exchange. So more recently, my role has changed again, and I'm now a director of 3 listed companies. Cephalana, my colleague Mohammed was up here earlier. I'm also on the board of RDC Properties and on the board of Affinitas, which is an investment holding company. And going back to the capital raising side of things, what I've seen is a change in the way in which listed companies relate to the BSE. And I think there's a shift towards capital raising from some of the earlier objectives of cashing out by original investors. And the reason is, it's been touched upon by some of the earlier speakers. And many of the companies that we now see listed are amongst the largest and most successful companies in Botswana. And one of the consequences of being large and successful in a small economy is that you soon reach the limits of growth. And many of these companies have reached the limits of Botswana market, and therefore continued growth is dependent upon expanding outside of Botswana, whether it's through greenfield growth, new ventures, or brownfield growth through takeovers of companies in other countries. But all of these require finance. Many of these companies, as I say, they're successful, they've grown fast, they're profitable, they've got cash on their balance sheet. They can also borrow from banks, but much of the capital required for this external expansion is coming from the BSE, either from rights issues from established firms or from new capital from IPOs. So certainly in the case of the 3 companies that I'm associated with as director, they've all done this and have used the BSE for capital raising to fund regional expansion, either through rights issues or IPOs. And I have to say, and other listed companies have done the same. It's not just those 3, I mentioned them because I know them well. The good thing is that raising capital on the BSE through rights issues and IPOs is relatively easy. I have to say, investors do have an appetite for taking up these opportunities. And it's a good way of raising capital. And I think this is an important future route for the BSE. It seems to be very acceptable to investors, most of which are the institutions, the pension funds. It's relatively low risk because these companies mostly have a track record, they're known management team, et cetera, et cetera. And certainly this rights issue route for regional expansion is much lower risk than some of the earlier issues that we've seen, particularly these earlier mining investments. There are other ways of raising capital on the BSE which we shouldn't forget. There are bond issues, and several companies have gone down the bond issuance route. I assume that others will discuss that. I have to say there's one area of slight disappointment on a personal level. Many of those of us who've been involved with the BSE for the last 2 or 3 decades have been hoping that it would be used as a vehicle for the privatization of state-owned enterprises. As many of you know, there's a privatization master plan, a privatization policy which goes back to the year 2000. We can all count how many years ago that was. During that time, there has been only one privatization, and even that, I've criticized it before. I have issues with the way it was done. It wasn't a real privatization because government still owns 51% of the company. But anyway, it was a partial privatization. But in general, it's been a big disappointment. The BSE has not been used for privatization. I hope things will change in the future. And we were all hoping that entities would be privatized, there'd be new issues, new stocks being listed, capital would be raised, and that in general hasn't been the case. Having said that, although I've been critical of the BTCL flotation, for various reasons. I have to say it has had one really great achievement. I think in the earlier comment on the video clip we saw of the BSE, there was mention of 78,000 investors. I have to say most of that is due to the BTCL flotation. So I think around 50,000 of the 70,000 individual retail investors on the BSE have come from the BTCL flotation, and that is by no mean achievement. Just before I finish off, my 15 minutes are done. I just want to raise one issue which has not been mentioned. There's been a lot of talk of capital raising, particularly by SMEs, but from the point of view of the SMEs. Don't forget the investors. If you're going to float shares in small and medium, and let me focus on medium. Someone asked a question, what's an SME? How do you define SMEs? In Botswana, when you say small enterprises, they're really small. They're not suitable candidates for flotation. We're talking about medium-sized companies. Even Cephalana, which Mohammed was talking about, it might be classed as a medium-sized enterprise elsewhere in the world, but in Botswana, it's a giant. It's a large enterprise. But the point is, who's going to buy these shares? And you've really got three choices: foreign investors, institutions, and retail investors. And I know from my time with one of the institutions is that, I'm sorry to say this, the institutions are not very interested in buying small stock. You've got to do your research, you've got to do your pricing and valuation, and it's just as much work to price and value a large company as it is a small company. And when you look at the potential gains, the returns from investing in a small stock, it simply is not worthwhile. So I know that the institutions are not really very interested in buying shares of entities with a very low market cap because the cost benefit just doesn't work out. Retail investors maybe, but the retail investors in Botswana are quite cautious. As I say, even the adventurous ones, they remember losing money on these mining shares. So I think just remember that when you're talking about raising capital by small or medium enterprises, it's not just about can we get the company to come to the market and list, costs, regulations. It's all about if they list, who's going to buy the shares? And you've got to think about whether there's going to be appetite for shares in small companies. There may be, but just don't forget that listing's only one side of the story. You need the investors as well. So